Hey everyone, Chris Versace here, portfolio manager of TheStreet's Pro Portfolio, and welcome to this episode of the Stocks and Markets Podcast. We continue to see more than a lot of attention stemming from folks that are raising questions about the AI trade, but also the subsequent explosion in the demand for power to power that ever-expanding data center footprint. And while the focus is on AI, the reality is that there's a lot more behind the tailwinds powering that growing pain point. To address that, electric utilities are stepping up their multi-year capital spending levels, but the growing thought is that it will take more, and that has brought nuclear power back into the conversation. And the forecast, my friends, for nuclear power is strong. The International Atomic Energy Agency suggests that global operational capacity could more than double by 2050, driven by a combination of new reactor designs and, you guessed it, increased demand from data centers. To help us dig a bit deeper on that, we are chatting with Roger Lemaitre, the president and CEO of Homeland Uranium, that is targeting 2 uranium projects in Colorado. Roger, welcome to the podcast.
Thank you for having me. I'm pleased to be here.
Well, Roger, this is a big topic. We're just going through the September quarter earnings season, and we're hearing some companies talk about capacity shortages, some calling out energy, specifically electricity. Before we get to all that, just let's set the table. Tell the folks at home about Homeland Uranium.
Well, Homeland, if you haven't heard of us, I'm not surprised. We're a new company, minted in March, and we're focused completely on developing 2 uranium deposits in northern Colorado that have the capacity to be a significant player in the U.S. Uranium industry.
Okay. And uranium really because of kind of what I talked about in the beginning about the potential ramp in nuclear power, yes?
Absolutely. But I think for us, that's the sweetener onto where we originally started this company. So
okay.
We were floating in March. It took us a few months to get going and to secure the assets and such. And our belief was, when I came back into the uranium space after being in leaving for a couple of years, that I wanted to be in the U.S. because there was absolutely a sea change happening in the uranium industry. Never, even on a more status quo kind of point of view before what's happened since the administration change. And with the U.S. producing less than 2% of their demand for the existing fleet of reactors, and the world changing geopolitically, we just thought this is the right place to be at the right time. Now, everything that's happened since then has certainly really added fuel to the fire and made the story more compelling. But I think even before the change and the real push in AI, there was a real need for the U.S. to secure, geopolitically secure supplies of uranium.
Yeah, I think that's a point that kind of gets lost on a lot of folks because of the prevalence of the AI trade and data center build out. But correct me if I'm wrong, the U.S. government, they've announced, billions of dollars worth of incentives, grants, contracts to grow the domestic uranium capacity, correct?
That is true. Absolutely. I think more focused at the back end of things than at the mining end. But that's definitely, there has been a few of those as well, and it's growing.
Right, but if the focus is on the back end and adding, incremental nuclear capacity, at some point you need fuel to put into those reactors. And I think you mentioned less than 2% of uranium is sourced inside the U.S. I suspect that with the reshoring push, at least by the current administration, that there are targets to take that higher.
Oh, definitely targets to take that higher. I think the challenge is the capacity in the medium, not definitely beyond the short term, but in the medium to long term, and whether that's actually there. So you do see a lot of great companies that are in the process of restarting operations or starting some new ones, and they're starting from almost ground, from almost zero of net demand. And I'm kind of a view that's a sort of a field of dreams in uranium space. If you can build it in an economics point of view, there is going to be demand within the U.S. So I think if everyone puts their plans together and comes to fruition within the United States itself, including ourselves, we're not going to get to the 50% mark. So there's still a lot of room to grow the capacity in the U.S.
So it sounds like a potential. The expression I use when I see outlooks like this, it's kind of a rising tide lifts multiple boats. But as an investor, you really want to zero in on those companies that have some strategic advantages, but also really understand how to capitalize on this opportunity in a very disciplined way, both from exploring the opportunities, but also as it relates to the business model. Can you talk a little bit about that? Because your comment a minute ago seems to suggest that that's the way you're thinking about it as well.
Oh, absolutely. For when we built this company, the plan was, let's be a resource bearing company. For many, many reasons, but one is that shortens the pathway. That's where the valuation is for investors. Not, I like to sit there and think, if you were to go into maybe into the Athabasca district, and I've had many, many years experience there, you can hit the grand slam home run, but it's kind of like being blindfolded, having someone, throwing you a major league pitcher throwing you a pea, and you could technically hit a grand slam home run, but it's a lot of risk. This is a low risk company. We're looking at historical resources defined by big companies back before 3 Mile Island put things to bed in the United States for decades. And for us, it's about reproving up those resources and then moving into the operational side of that as quickly as we can and building meaningful operations. So what I mean by that is that there's a lot of things you can go out there and you have 1 million or 2 million pounds of resources, and you can go, that could go, but the ability to put scale together to do multiple million pounds a year type of output, which is meaningful, is something that I think this company has been poised from the beginning to do.
So the two projects that you've targeted are in Colorado. You're saying that they're proven. We've talked with other resource companies that are doing something similar, whether it's on oil or other areas. But in this case, to scale those assets back up, because as you just pointed out, they've really kind of been, for lack of a better term, mothballed since 3 Mile Island. What's the timing for that? What's the degree of capital needed to update everything and kind of bring it up to production ready in today's world?
So we're kind of, we're in an awkward spot to say, we're at the standard milestone here. We have an area where we know the resources are. We have to prove them up to today's standards. So that's going to take a couple of years. And that's going to be a couple of years of permitting to go through the process. So we're talking about a 4-year window to construction. And we're looking at open pit potential operations with what we call a heap leach back end and an IX recovery, which is what we're seeing in the US at all the in situ leach plants. So in terms of building, we're not talking about mega mines here, like some of these big operations you're seeing in copper space. But you're probably looking at a couple $100 million to get to the finish line in a 7-ish to 8-year window.
And that's when you're pulling uranium out of the ground.
That would be the goal, yes.
Okay. And for folks that are new to this, and I know you and your team are very steeped in this, but what are some of the key milestones along that 7 to 8 year period, such that if you're a long-term patient investor that wants to have exposure to this, that you can be aware of and kind of tick off as you or another company that's going after this opportunity kind of passes these hurdles?
Okay. So I'll speak more about TWARS because that's the one I'm the most familiar with.
Sure.
But between the halfway point of next year, we want to, on our first project, we want to be at a point where we have our initial inferred resource. So that's 6 months from now. At 18 months, you're looking at an indicated resource on that project. Meanwhile, the second project will be 6 months behind in both of those milestones. From there, you're looking at a 1-year window to do the advanced engineering studies, the pre-feasibility and feasibility study. So that gets you out to the sort of 36 month window, and then 2 years beyond that to permit, and then shovels in the ground. So
shovels in the ground, if I listen to you correctly, the back of the envelope math, you're talking 2029, 2030. Is that fair?
That's about right.
Okay. And does it concern you at all that timeline? A lot can change in that timeline, I guess, is really what I want to ask. What gives you the long-term conviction that the path that we're on isn't likely to change? And I say that because I can't think of anything out there that is likely to emerge that would address the energy or the power pain point in such a demonstrative way that we could see this backpedal. But I wanted to get your thoughts on this.
Ooh, you know, everything could be subject to change. I mean, there's no doubt about that. The world can change radically. I believe that even if, I think the biggest thing that your utilities are looking for in the space is reopening of Russian uranium supplies. And that's not so much uranium supplies, but uranium products, which is the between what's the mine been mined and what actually turns into a fuel pellet to go into a reactor. That doesn't really impact where we're at and what we're doing. So I really struggle with an answer that doesn't sound ridiculously optimistic because, I mean, obviously I'm a bit biased, but because I'm in this space for a reason. But with demand for nuclear energy exploding globally, we're
Mm-hmm.
talking about groups. There's 31 countries that are pledging to triple capacity by 2050. And I don't believe that's realistic. But even if they got to 25% of their goals, what we see is tremendous supply gap happening in the space. And with no investment in the uranium space for the last decade, to bring on significant new capacity that will replace, and it will just be enough to replace existing mine shutdowns that will from resource depletion. I just don't see how we get there and maintain an existing fleet of reactors globally that is growing still very quickly with what's happening out in the Far East, but certainly not growing the demand for things like AI. And I just can't see how it changes the demand for what we're doing. Anything can change politically, but I don't believe, and I think nuclear has been, especially in the U.S. over the last decade, a very it spans party lines. So I don't see that changing per se
Mm-hmm.
in
Mm-hmm.
terms of support.
Oh, let me back you up a second because you did touch on the Russian aspect of this,
Mm-hmm.
and it's my understanding that the U.S. ban on Russian enriched uranium imports, they kind of turn the waivers that are out there, they terminate in very early 2028, so that if I'm understanding this correctly, the crunch for uranium intensifies down the line.
Absolutely. I think the biggest challenge with what happened after the end of the Cold War was how the West, I wouldn't say dismantled, but certainly let their existing nuclear or uranium fuel infrastructure sit idle because of the megatons to megawatts program that happened after the wall came down, and allowed the Russians to take a pretty substantial piece of the enrichment capacity globally. But that capacity in the U.S. and in Western countries has to be built back up again. We're seeing that race happening now, but it probably doesn't happen before 2028, 29. And even then, will it be anywhere close to the capacity needed to meet the demand?
So I know that you keep a close eye on the end market demand. You just mentioned 31 countries, attempting to triple their capacity by 2050. Folks talk quite a bit about an AI bubble. Is there a chance that we're getting into a nuclear bubble as well?
Oh, absolutely. You could argue that's definitely the case. I think if you're in the tech industry today, and
Mm-hmm.
no matter where you are in the world, but particularly I think in the United States, you are going to want to make sure no matter what happens, you have power. So it's baseload energy, period. So solar and wind isn't going to cut it. And there isn't a lot more capacity to bring in things, particularly in North America when it comes to hydro. So you're either going to go with fossil fuels or you're going to go with nuclear. And, either's fine. The question is which one creates the most long-term stable demand that would be a little less fickle to what might happen in terms of people's views on climate change or such, and the changing political aspects that we've seen already happen over the last 15 years. So nuclear makes a lot of sense for them, especially these small modular reactors that are really starting to be pushed to the forefront, particularly by this administration.
Right. And I know that we've seen Meta, Alphabet, or Google make investments, talk about their investments in nuclear and small nuclear reactors. We're also seeing electric utilities kind of do something similar. Are there other tea leaves, though, that you kind of watch that the investors should be watching as well?
I think it's the amount of steps you're seeing, particularly in the small modular reactor space, as approvals go forward. So you're seeing designs go through the process of approvals at various stages in various countries, and that just tells you how fast that whole process is changing. If you'd asked me 5 years ago, what's small modular going to do? What's its impact going to be in the nuclear space? I would have said, oh, that's a 2035 beyond window. And now you're sort of saying, wow, we're seeing shovels in the ground on a few of these around North America alone. And it's I do believe that there's a serious race to see the first 3 or 4 of these designs come through. Once their designs come through and they have cost certainty, I think you're going to see rapid adoption by utilities and technology companies.
What's the sense of timing in the market for that? Because I'm just trying to square this up with, your initial comments was this is a medium to long-term opportunity, but it also sounds like things are accelerating. So if we think about the 2029 to 2030 timeline that we talked about for your company, how does that square with what you just said about these small nuclear reactors?
I think you take a 2020 or 2035-ish window with a moderate adoption, and you're turning it into a 2029, 2030 window with significant adoption.
Okay.
And I think that's what's changed. I've been in the uranium industry since 2001, and I can't ever recall the uranium industry and the nuclear industry being in so favorably viewed across the spectrum. And I think if I talk to the people that were before my time back in the 70s and 80s, they say pretty much the same thing. They've never seen, the 70s was the golden age for nuclear back when the nuclear buildouts were happening, but they don't see it as robust as what's happening today in terms of public opinion.
So it's fair to say that there's a new nuclear age on the horizon.
I believe so.
Okay. So let's talk a little bit about your company. You were formed earlier this year with the sole intention of focusing on the uranium opportunity. Again, we talked about a reference, I should say, 2 projects in Colorado. You talked about the timing for those. What's the reception that you're getting when you talk with the investment community about all of this?
I've actually been overwhelmed by how many people are excited about what's happening. I think the first question I get is it real? And, I'll be honest with you, when it was being proposed to me a year or so ago, the opportunity, I kind of looked at it and went, oh, I don't believe this. I don't think it can be real because I would have heard of this before. I've been all over the world in the uranium space. But when you did the digging, you went, wow, I can't believe this has fallen through the cracks and it's actually available for staking.
So just back up. So you're talking about the project space that was mothballed, and the company had the opportunity to purchase that. That was I shouldn't say the point of conviction, but that was certainly getting you there.
Absolutely. I was interested in the U.S. in finding something in the U.S. before that. The fact that an asset or 2 assets of this quality were able to come to us when the sort of movement had already been happening in space. It was already 6-8 months in and it hadn't been picked up was surprising. And I think it had more to do with the fact that these projects were done by companies, one of them, particularly Western Mining, which was one of the best explorers in the world back in its days. Now, they found the Olympic Dam deposit in Australia, for example, but they weren't public companies per se, and these weren't material things, so they never got reported. So there was some very good research by the vendors of the property that we bought this from that did, hey, you dug into this, found this information. And I just can't believe it was forgotten about. So people were skeptical. So once we show them what we've learned, they get a lot more excited. And they like the opportunity for an open pit, scalable deposit where we can mine multiple million pounds in a given period of time. Because like I said, that's a meaningful impact.
So Roger, let me just ask what may be a very basic question.
No, absolutely.
When you say open pit, what does that mean? And in the back of my mind, I just think of myself as a young kid. When you hear uranium and nuclear, you think of radiation emitted. Oh my goodness, what does that mean? Help educate us on that, please.
Sure. I think that most people obviously are very afraid of uranium or of radiation, and that's sort of I call it the Simpsons effect in my point of view. Okay. Right. But when if people got to spend a little bit of time and learn the actual impacts, unless you're really eating the stuff, it's hard. If you want to keep it out of the groundwater, absolutely, as you would with any metal, no doubt. So to me, it's a whole lot about what's happened in the mining space, and particularly uranium space since 1970s, is very different than what's being done today. So we've seen some very cool and very safe mothballing of old mines, particularly up north in northern Saskatchewan, Canada, where people have got some best practices that are much more in line with where the industry needs to be. And the industry has earned its challenges over from those days, with the public. But I do believe that the rules are much, when it comes to putting these operations to bed, they're much more robust and rightfully so, as it should be.
So let's flip that around, right? Because it has been a couple decades since they've been mothballed. If we look at other industries that are similar in nature, where we're pulling materials out of the ground, we've seen a tremendous improvement in the cost to get these things out of the ground. How does that work here?
I think actually that's what's going to make these U.S. deposits way more competitive than they've been. Part of the reason why U.S. resources in the uranium sector have languished over time is that the cost curve they got undercut in the cost curve by the Kazakhs and, quite frankly, by the discovery of the Canadian Athabasca deposits, because they came in at a much lower price and they were able to satisfy all of the world's demand at that time. What we've seen, Kazakh prices are going up. They're still going to be the lowest cost producers. That's not going to change. We've seen Canadian prices go way up over the last little while, yet no one's applied the last, particularly in these projects of ours, no one's applied 40 years worth of knowledge of open pit uranium or open pit mining, never mind uranium mining, but particularly the back end recovery of uranium and being able to use that versus old conventional milling from the 1970s. So I just believe that there's been an awful lot of learning that's never been applied. And we're not reinventing a wheel here. We're just applying the tools that already exist that have been improved upon for the last 45 years.
So are there any orders of magnitude that you can kind of share? And I realize that these might be more estimates than not, but just conceptually, the cost to do something like this, is it, 20% lower, 30% lower than it would have been back in the 70s?
On a relative basis, I think you're probably looking at somewhere in the 25-ish% range for sure. That's sort of what I have in my mind as to what can be done. And then it's also about scale. A lot of the open pit mines back in the 1970s were very small deposits, 1 million pounds, 2 million pound sort of total resources. We're looking at an order of magnitude higher than that. So there's awful lot of synergies. Not necessarily more space taken up to do it, but just more synergies there. We back in those days, you were using 10-ton trucks. Now you can use 40-ton trucks, 50-ton trucks. For example, the milling costs and milling technology is far superior. We're going to apply heap leach technology as a potential opportunity for us. Don't know if it'll work, but we're going to start the testing process this year. And that significantly lower cost. This was just starting to be applied in the United States back in the infancy days of heap leaching, when no one knew anything about how to do it properly in any commodity for that matter, and apply it here because we just think it has the potential to really lower cost and put us in the low cost half of the curve.
Okay. And then again, just making sure, just for consistency's sake, sticking with that 2029, 2030 timeframe, when you talked about hitting the revenue where scale benefits really start to get layered on, is that in that time frame, or is that a little later than that, 2030, 2031, something like that?
I really can't answer that because it's a little bit beyond where we can forecast. I would suggest that there's always a 1-year ramp up period when it comes to an open pit, to be blunt. But I would imagine that an open pit is going to run its course and be mined beforehand and have stockpiles waiting to run a mill process therefore afterwards. That's usually what you see in most open pit operations, unless they're mega copper projects where they're mining out an entire mountain, and then that's a lot more hand to mouth. But yes, I think you're probably looking at a 6-month-ish window to strip enough material to keep a steady state going to the mill.
Okay. And
I think what I'd like to sort of point out is that existing operations in the U.S., the ISR in situ leach can recover somewhere between 500,000 to 1 million pounds a year of uranium. And those are very effective operations. No doubt they were struggling to make things go before this last cycle. That's why you're seeing them just come back online. But if you're looking at an open pit with a 10-year mine life that has a 20 to 40 million pound resource, you're talking about, that's what I talk about significant difference. Mm-hmm. You have the ability to put out more than 1 million pounds a year into the market.
Okay.
in a market that
And
right now needs about 170-ish million pounds a year at its current non-growing state.
and I think I saw it's supposed to grow. Don't hold me to this, but I think that the demand is supposed to grow by about a third by 2030. And this is data from the World Nuclear Association, double by 2040.
Yes, that's correct. So the one thing I can absolutely tell you right now is that the industry is going to struggle to beat demand with everything that we know about today, not just in the United States.
And, for someone who's been in and around, the industry, how accurate is the World Nuclear Association? And kind of as a backdrop to that, there are certain, research firms that they forecast, for example, cybersecurity spending. And it seems like, over the last several years, they'll have an initial forecast in January for the coming year. And lo and behold, almost like clockwork, it ticks higher throughout the year. So, and I understand that this is kind of a long lead time, but, in your experience, has the World Nuclear Association, have they been close, or have they been kind of, on the low end when it comes to reality?
I would argue that I'll put the IAEA, the International Atomic Energy Agency, and the World Nuclear together because they kind of work hand in hand in some ways. They're extraordinarily conservative organizations, and what I mean by that is they're in an industry, a nuclear industry, which is extremely conservative because they want safety is paramount, as it should be. But they're also dominated by the utilities, and so they have a utility-centric view of the world. And I thought it was very interesting to watch. If you go back 2 years ago and look at the 2023, 2022 World Nuclear Association demand curve, and compare it to the current one, it looks similar until you look at the scale on the left-hand side.
That's funny.
And suddenly you're going, oh, that's significantly, it looks the same, it has a similar profile, but then you realize that it's not an order of magnitude better in terms of the one side versus the other, but it's significantly improved. And I think the IAEA example came out this year with their red book, and they put in a statement. To me, it's sort of like parting the ocean a little bit here, like Moses, and saying, oh, hey guys, we think there's enough uranium in the world to meet these current forecasts, but we're going to have to put some money in the ground to figure it out. And they've been telling the utilities for decades that there's more than enough uranium for the next 300 years. So that's it. I know it may not be a lot of words change, but it's a significant viewpoint change.
Right. Okay. And let me just get some questions answered here. So 2 projects, roughly how many mines do you think you can get between those 2 projects?
That's 2 significant deposits that are very close together. They're about 16 miles apart. So we'll probably end up operating them as a single center, if that makes sense. So 2 mines from one operation. That would be the goal. And
if we were to look longer term, I doubt that you would have formed a company to simply mine 2 mines. What's some of the longer term thinking?
Our view would be to build a company that has the ability to do what we call conventional mining versus in situ mining in the U.S., where each opportunity is enough scale to bring 3, 4, 5 of these operations together. And what that does, and it's important, because it changes the way in which you can sell uranium. So if you own 1 mine, your utility is going to not want to sign term contracts with you because you're more risky in terms of supply interruption of some sort. When you have 4 or 5 mines, and you look at the big companies that are out there, they can sign long-term contracts. They get the benefit of maybe basically hedging a little bit of their production going forward and making things stable. And if you look at a company like Cameco, what got them through the post-Fukushima era was their long-term contract portfolio, which was significantly priced higher than the spot price at the time. The reverse is true in an upswinging market. You end up signing contracts that may be a little bit behind the leading edge of spot. But usually it works out at the end.
Okay.
I like to build a company that has the ability to exposure to the term market.
Got it. And so, and again, just to come back to make sure we're on the same page, 2029, 2030, what's the thinking there in terms of the number of mines? Is that just the 2?
That would be the 2. Right now, it's all we have. So I wouldn't be able to say we could do more unless we pick up something that's farther along the development path. But there are not many of those opportunities out there.
Okay, and I suspect that if and when the time comes that you achieve another such opportunity, we would be made aware of that, press release, filings, that sort of thing.
Absolutely.
Okay. So if we think about the next 3 to 5 years, right, what's going to tell you that you're tracking, that you are hitting the cylinders and the timelines that you think about? In other words, how do you know that you're tracking, Roger, for your big opportunity?
Yeah. So for us, we're just about starting drill program, which we've announced in November here. We'll start that. The plan would be to get that first project by the middle of next year to an inferred resource stage, so that we know whether we have enough resources there to move forward with the next step, which would be to increase the certainty by infill drilling that, which will take us to the end of 2026. And then we'll know whether we have enough. We'll be able to do engineering studies to get us to the end of 2027. So those are our sort of three big milestones. On the second project, it's the exact same thing 6 months in advance and behind.
Okay.
And so by the end of this half of the first year of the first project, we'll also do some preliminary metallurgical work to see whether our heap leaching idea will work, and that will help us move that engineering stage forward in a 1-year window instead of an 18-month window, where you're doing that kind of work. So that's the plan. Basically, 2 projects in parallel, 6 months apart.
Got it. And, whenever we talk about opportunity, we always, as investors, need to think about the risk. And as I'm listening to you, it sounds like there's 2 likely risks. One is time. It takes longer to get the projects done. And then we kind of tie that into capital, because you will need, obviously, capital to fund the program until you cross over into revenue generating and then cash flow generation, which, as we know, is several years out. Is there any other big risks out there that investors need to be mindful of?
Well, certainly, proving up the resource is probably going to be the biggest risk. That's why we're tackling it first, of course. And so, there's always a risk that if we do drill holes, things don't end up exactly the way we see them or thought they would be. So that's the technical risk up front. And then the next thing, if it comes with any mine in any industry, anywhere, it will be the permitting risk, whether or not it gets through the permitting guidelines of things, whether someone has objections to it or not.
Okay.
And I think that's where one of the reasons why I like the United States, particularly before the current administration, is that everywhere else in the world, uranium timelines have gotten extraordinarily long. I think I could point to examples of some of our much larger peer companies that are looking to develop in other jurisdictions that are struggling to get to the finish line through the permitting stage. Basically, they've been ready to go for a long time. So yes, making sure we get stakeholders involved and online or on site is the next biggest risk after permitting. Those are the 3 key things. Capital is always going to be a risk. I can only control so much of the capital markets, so I can control these other 3. To a degree.
Well, I'm glad you said that about the
I can influence that.
I understand. I understand. So let me ask you this: is there anything that clearly over the last few years the tide has turned, where nuclear and uranium are a talking point now? Is there anything that could happen in a positive way that could accelerate the timetable for the company?
Oh, absolutely. I think more than anything else, the faster these small modular reactors get approved and start being built, and if there's, if we see, I would argue similar to when the EV thing was started a few years ago, and we start to see big companies piling in to make big orders on when it came to EVs, as for example, Amazon going out there and saying we're going to convert our truck fleet over, etc. Mm-hmm. Those are going to be those types of decisions where someone comes out and says we're going to buy 10 of these reactors. Would be absolutely huge, for sure.
Okay, cool. Roger, we've covered quite a bit. Before we get out of here, is there anything that we didn't talk about that, from your perspective, we need to know either about the industry or about Homeland Uranium?
I think more about Homeland Uranium is that one of the things that is, I think, unique about our company is we have everyone has great management and great leadership. You hear them always talk about it. Mm-hmm. I think what sets us apart is our board, for example, decades of experience in capital markets, junior market space, uranium space, both from a technical, they cover all the bases. This should be a $400 million company that this board is part of. I think that speaks to the quality of the assets that we brought to the table. Our management team has been there, done that, made discoveries, been involved in the industry for years, and have been and managed companies. So we're not coming to this opportunity with only financial background or an only geological background. We kind of mesh all that together, and company management background. So we cover, I think, when it makes us, I don't say unique to the space, but it makes us more akin to the bigger companies in our space than the smaller ones.
Got it. Well, Roger, thank you for spending some time with us today. I know this is a multi-year story, and it's one that we're going to continue to follow. And I hope at some point down the line, whether it's making progress on the existing mines, or maybe even the announcement of the third, that you'll come back and speak with us again.
Look forward to that opportunity. Thank you very much.
Awesome. Thank you so much. Folks, if you're looking to learn more about Homeland Uranium, be sure to check below and you'll see some helpful links to the company website as well as the investor relations page. And just in general, folks, thanks for tuning in, and rest assured, we'll have another podcast coming your way before you know it.